The U.S. could soon be in the middle of a different kind of war. This one involves trade.
And the U.S. economy is already feeling the impacts. Take a look. Stocks took a dive today after China raised import duties on a number of U.S. exports. The Dow plunged 459 points, the Nasdaq dropped 193, and the S&P 500 lost almost 59.
KCAL 9 political reporter Dave Bryan joins us now with the impact on California businesses. Dave?
Yeah, it was a double whammy today because you had a lot of the big high-tech companies slumping, and then you also had companies that were involved in exporting that took a big hit today. From wine to nuts, California products could be priced out of the competition in China as the tariffs kick in, jeopardizing millions of dollars in commerce. The markets are now actually under attack from two different directions: the growing sense that a trade war is coming, and also the presidential Twitter slam on Amazon and the high-tech slide. Everywhere you looked, stocks were plunging Monday. The Dow Jones Industrial Average was off nearly 2%, and the S&P 500 saw a similar decline. Now, those two indices are in what's considered correction territory after more than a year of big market increases.
The first quarter of 2018 was the worst for Wall Street in like the last 2 years, and that was really because of a bunch of volatility, whether it was related to tariff issues, trade issues.
In fact, the Nasdaq has now given back all of its 2018 gains. The Monday market retreat was driven by a sell-off of giant tech industry stocks. President Trump stepped up his attack on Amazon on Twitter, repeating his view that the company's business practices are hurting the post office. It's the first time the president has expressed any concern about the post office being hurt. Amazon ended the day losing more than 5% of its value. Facebook, which started the tech downturn last month after it was revealed that it mishandled the personal data of millions of its users, lost 2.7% Monday. Collectively, shares in the 5 tech stocks known as FANG, Facebook, Amazon, Apple, Netflix, and Google, lost about $324 billion of their market value in the last 2 weeks.
Anything that impedes their forward progress is a sell signal to a big investor. But they don't want the risk of sitting on top of all of these multi-year profits only to see some of those profits evaporate.
The market also felt the effects of China's decision to slap tariffs on American pork, fruit, and 120 other types of commodities. Those tariffs will cover products imported by China from the U.S. worth about $3 billion. China's foreign ministry says China doesn't want a trade war, but it's not going to back down if provoked. The move will hit hard at American farmers, including many in California, like almond growers in San Joaquin County, who will be facing a 15% tariff now in China.
Yeah, growers met for coffee this morning, and they said, wow, the first heading on the paper was there's a new tariff on almonds.
Almond grower Dave Fippen says he has a lot of questions now.
Our loads that I have under contract right now that are going to ship a month from now, are they going to be impacted by that? Are we talking about new crop, which are these nuts that are hanging on the tree?
But no matter what the specifics are, Fippen says this is obviously bad news.
Anytime there's any obstruction to any market in the world, that's not a happy day for us.
The California wine industry would also be hit hard by the 15% China tariffs. At the Ridge Vineyards in the Santa Cruz Mountains south of San Francisco, the wine business with China has been booming. In fact, in the last decade, sales of U.S. wines in China have quadrupled. And in 2017, exports of U.S. wine to China, Taiwan, and Hong Kong reached $210 million, a 10% increase from the previous year.
Really, over the last 5 to 7 years, we've seen really nice, steady growth for our wines in China.
And the president of Ridge Vineyards says the 15% tariff on American wines will put him and other U.S. winemakers at a huge disadvantage in selling to China, perhaps wiping out those increases from recent years.
We are already in sort of fierce hand-to-hand combat with France and Italy and Australia and Chile, and now we're just, ceding them a lot of advantage with our wines now being that much more expensive than theirs.
The fear is this could be just the beginning of an increasing tariff battle.
Fear is an escalation. Whether this becomes a trade tit-for-tat conflict, which escalates into a trade war, that would be a terrible thing for each of those economies.
Now, tonight, the New York Times reports that some industry giants like General Electric and Goldman Sachs and some agricultural companies have lodged objections with the White House. They charge that the tariff battle and limitations on investments will cut off American companies from the world's most lucrative and rapidly growing market. That would be China, a market with which the U.S., they say, should be increasing trade and selling popular American products. Big moneymakers for the U.S., they say. Suzanne, Juan?